If you are like me, you are mystified by small business taxes. I'm going to break down for you everything that I've learned about how to pay taxes as a small business owner in Washington State. My name is Wallace. I'm a bookkeeper at Arbor Vitae Financial Services, LLC. Let's dive in. Who is this video for? If you run a small business in Washington State that is structured as a pass-through entity, so an LLC, a partner LLC, or a sole proprietorship, this video is going to contain information that is relevant and helpful for you. Now, disclaimer, I'm a bookkeeper. I'm not a tax professional, and I'm not a legal professional. Everything contained in this video is based on my personal experience as a small business owner in Washington State, and it's not a substitute for tax advice or legal advice. This video is for entertainment purposes only. So, let's look at the big picture when it comes to small business taxes. You have to pay both the state of Washington and the feds. Most sources that talk about taxes for small business really only address one or the other, but they don't paint a holistic picture of both. That's what I want to do for you today. Hopefully, this information will help you understand your tax obligations clearly so that you can set aside enough money to pay both on time and the correct amount to the state and the feds. So who are these people? Who is the state? Who are the feds? And what do they want from you? In Washington, the State Department of Revenue is the tax body that you pay taxes to. They know you by your UBI number. You receive that number from the Secretary of State, and then you use that number when you register your business with the Department of Revenue and get your business license. So what do they want from you? They want business and operations tax. That is also called B&O tax for short. It's an excise tax. This is what Washington has instead of state income tax. Washington also wants sales tax from you. Sales tax is paid by the purchaser. It's your responsibility to collect it, and then you just send it to the state. Now, who are the feds? That's the IRS, and they know you by your EIN number. After you've established your business, you have to apply to the IRS directly to get issued an EIN number. They want income tax from you. That's a variable percentage of your taxable income based on your tax bracket. Most people are familiar with this. They also want self-employment tax. So if you work for a boss, they're going to withhold taxes from every paycheck that you're paid. If you don't work for a boss, nobody's withholding that tax from your paycheck. So that's where self-employment tax comes in. It stands in the place of the payroll taxes that your boss would withhold on your behalf. Let's now take a closer look at each of these taxes. We'll do Washington State Business and Operations Tax, Washington State Sales Tax, and then move on to federal income tax and federal self-employment tax. So, Washington State Business and Operations Tax, also called excise tax, is paid by the business on its gross income. That means you do not deduct business expenses from the total income when calculating this tax. The percentage that you pay depends on your classification. If your business is a retail business, you pay 0.471% of your gross revenue. If you have a manufacturing business, you pay 0.484% of your gross revenue, and that's also true if you have a wholesaling business. Services is a little different. So if you sold under $1 million of services in your prior year of business, or if it's your first year of business, you pay 1.5% of your gross revenue. But if your previous year you sold more than $1 million of services, then you pay 1.75% of your gross revenue. So as you're earning money through the year, you have to take this percentage of every sale you make and set that aside. Washington State sales tax. This can be very confusing for people. So the basic structure of sales tax is that it is paid by the buyer inside the state anytime that they make a purchase. The seller simply collects the tax and then returns it to the Washington State Department of Revenue. The sales tax is a percentage of the selling price, and that percentage is based on the location of the sales. So the state, county, and city all have a sales tax rate that are combined to get your local sales tax rate. And the Washington State Department of Revenue actually provides a really useful app to help you find the precise sales tax rate for the location of the purchaser to whom you make a given sale. Because it's based on location, there are some special issues with sales tax, especially when it comes to digital goods. There's also use tax and some special circumstances around what use tax is and when to know if you have to pay it or collect it. And then if you fail to collect sales tax or you collect the wrong amount, you are still on the hook to pay the total correct amount to the DOR. Now to the federal taxes. So for the federal income tax, I'm sure you've heard that some business entities are structured as pass-through entities, and this is where that's relevant. The profit of the pass-through entity passes through to you, and it's combined with your other sources of income. So normally you would file a Form 1040 to report personal income tax. And the profit from an LLC that you own is part of the personal income that you report on that Form 1040. So let's say, for example, you have 5 LLCs and 1 full-time job. The W-2 wages from your job and the profits from each of your LLCs are combined, and that total number determines your tax bracket. Now remember that profit here equals income minus expenses, so this is not your gross revenue from the business being combined with your W-2 wages. It's just your business profits combined with your W-2 wages. Now federal self-employment tax. This can be very confusing for people as well. This tax is paid on profits. However, it's only paid on the net income from the self-employment, and it's a flat percentage no matter how much money your business makes. There's no tax brackets for federal self-employment tax. Let's take a look at your total federal tax obligation. It's big, and I want to make this very clear because this can really trip up early stage new business owners. Let's say you only have self-employment income in a given tax year. That amount of income determines your tax bracket for the federal income tax. Now, if you're not making a lot of money with your business, this isn't such a problem. But if you've been really successful, the tax obligation can be substantial. So it's very important to be prepared. You'll need to pay federal self-employment tax on the same money that you earned that you pay federal income tax on. So you have to add 15.3% to whatever percentage you end up with based on your tax bracket. Let me break it down with a simple example. Let's say you have just one business, you quit your job, you're just doing the business, and it's going really well. You have $150,000 in profit your first year. That's after expenses. It's $150,000 in profit. Therefore, your total income for that year is $150,000. So you fall into the 24% tax bracket. That's $95,000 to $182,000 of income. You have to add 15.3% self-employment tax to 24%. That makes 39.3%. And yes, that's correct. You have to save 40% of your first year business income just to meet your federal tax obligations. That doesn't include Washington State sales tax. That doesn't include Washington State business and operations tax. This is a big expense for small businesses. So it's very important to be saving this money from day one. Now let's talk briefly about deductions, because in Tax information sources, the word deduction is very commonly seen, but they're two separate types, and I don't see them clearly defined as being different. So when you file a Form 1040, you can take the standard deduction or itemized deductions. That is one type of deduction that does not apply to your small business. On your Schedule C, you deduct business expenses from business income to find business profit. Those are called deductible business expenses, and not all business expenses are deductible. In fact, you can get in trouble with the IRS by trying to deduct something that's not actually deductible, or not meeting the requirements for a deduction that you'd like to take. So when you're trying to figure out what you can deduct, the business is separate from your personal income tax return. If you have business expenses that are deductible and you deduct them from your business income to find your business profit, that passes through from your Schedule C onto your Form 1040. Then, once you're back at the Form 1040, you can look through your itemized deductions to see if they exceed the standard deduction. But in many cases, the standard deduction will still be the best choice for you. I hope that's clear. I hope that clarifies things. Now let's look at an example showing all of the taxes. We have a sample entrepreneur. The year is 2023. Her name is Angela. She has a part-time job where she made $32,000. She also has a consulting business called Fresh Perspectives, which made 2 sales of consulting services. The first sale was $45,570, and the second sale was $88,970. Please notice the dates here. So April 4th and May 23rd, those both fall into the second quarter of the year. Now, let's follow Angela as she pays all of her taxes. Oh, and she had expenses of $54.50 for that year. So let's calculate what she owes Washington State. Washington State business and operations tax, because she has a services business and because it's her first year and she didn't sell over $1 million the previous year, she owes 1.5% of her gross revenue. So her gross revenue is the total amount of her 2 sales added together, and we find 1.5% of that number. That is what she owes in business and operations taxes. Because her sales happened in quarter two is April, May, and June. So the due date is the end of the month following the quarter. That's going to be July 31st for quarter 2. Now for sales tax. The first sale was to a client in Tacoma. The local tax rate in Tacoma is 10.3%. So you add, hopefully, let's hope, Angela added 10.3% of $45,570 and collected that from her client. The second sale was $88,970 in Everett, and the local tax rate in Everett was 9.9%. Let's hope for Angela's sake that she collected $88,970 times 9.9% from her client. The total amount, $13,000, is also due on the same day because both sales happened in quarter 2. What if Angela did not collect that money? She still has to pay it to the DOR. So this is important to notice. When she adds the percentage to the total amount, it works out to 10.3% of the first sale, 9.9% of the second sale. But what if she had to subtract the total owed amount from her income from those 2 sales? It would actually be quite a bit more than 10% and 9% respectively, because it would be subtracted from what she brought in from those sales. So it's very important to make sure you're collecting sales tax at the time of sale, because if you don't, you still have to pay it, and you will be on the hook for a greater percentage of your total income for paying that sales tax without collecting it. Now, what does Angela owe the IRS? So she had that part-time job, and then her LLC had gross revenue, which we found by adding her total sales. But she had those business expenses, which, for the sake of this example, we're going to assume they're all deductible. Gross revenue minus expenses equals $129,000 in profit. Angela's income is her LLC profit plus her W-2 wages. Works out to $161,566. That puts her in the 24% tax bracket. Angela can still take the standard deduction of $13,850 for the year 2023. These are all 2023 numbers. By subtracting the standard deduction from her total income, her taxable income is $147,000. Now, federal self-employment tax is 15.3% of her business profits. Her profit was $129,000, so that leaves her with $19,737 due in federal self-employment tax. So her combined federal tax obligation, she owes 24% of all of her income plus 15.3% of her income through the business. 147 and change times 24% plus 129,000 times 15.3%. That adds up to $55,000. So Angela had a very successful first year with her business. She made over $100,000 in profits, but she owes $55,000 in taxes. This is very important for small businesses to understand. Enormous success can become cumbersome very quickly if you don't preserve the money that you need to pay taxes. So hopefully this example has been sufficient to demonstrate how important it is when starting a small business to be keeping very clear records, to be prepared to pay taxes on time, and to not allow yourself to be surprised by your total tax obligation when the time comes. I hope this video has helped you understand the different types of taxes you must pay as a small business owner of a pass-through entity in Washington State. Thank you so much for watching, and I'll see you next time.